Hey everyone, Cathie Investor back to another video for you today. So we're going to talk about Roku's earnings report. They reported earnings yesterday after the market closed. The market was not very happy. The stock at the time of making this video is down around 7%. Now when the market opens, obviously that might change. So in this video, we're just going to go over the main key points of the earnings report. And then I'm going to share my opinion on what went wrong and what went right with Roku and the plans for the future. Now, some of you are probably fans of ARK Invest, so we're going to have a look at where Roku stands right now. If you remember, not so long ago, Roku was, I think, top 2 or top 3 holdings for ARK Invest. Right now, it sits at number 6, right under Square, Unity, Coinbase. Yes, Coinbase has made its way up to number 3 very, very fast. Teladoc number 2, and then obviously Tesla number 1. As far as I can remember, I don't think ARK has sold Roku shares in the last couple of days, but maybe today or tomorrow they might jump in to buy or maybe to sell some of their position. Alright, now before I jump into this earnings report,
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now.
Alright, let's go over the key results. Total net revenue grew 51% year over year to $680 million. Now you might think this is great. Yes, this isn't bad at all, but estimates were a bit more, so that's a miss. Platform revenue increased 82% year over year to $583 million. That's very nice, and that's a beat as well. Gross profit was up 69% year over year to $364 million. That's also a beat. Now here comes the numbers that weren't that great. So active accounts reached 56.4 million, a net increase of 1.3 million active accounts from Q2 2021. That was also a miss, but a very, very tiny one. Streaming hours were 18 billion hours, an increase of 0.7 hours from Q2 2021. That was also a tiny miss. Average revenue per user grew to $40.10, up 49% year over year, which was a beat. And then lastly, the Roku channel was a top 5 channel on the platform by active account reach. So it's great to see that the Roku channel is still continuing its success. As you can see here, platform revenue great, still growing 82% year over year, although last year that quarter was also a huge quarter because, well, COVID. But if you can see right here, player revenue is down 26% year over year, and we're going to see in a bit why. Now, the outlook is really what made the market dump this stock after hours and maybe pre-market as well. So the outlook for total net revenue is going to be between $885 and $900 million, which is approximately 37% year over year growth. And that's a miss on estimates as well. Total gross profit between $380 and $390 million, representing a 26% growth year over year and a miss as well. Net income loss, -$5 to $5 million, and adjusted EBITDA at the midpoint of $70 million, which is also a miss. Now, I'm sure some of you might be asking yourself, is he turning bearish on Roku? No, I'm not turning bearish on Roku. I don't think a company's story is going to change with just one bad quarter, even though this quarter wasn't bad at all. Yes, guidance was a bit weak, but there is more context to it. Now remember what we talked about the active growth accounts before. So here it is. So they grew active accounts by 1.3 million, ending the third quarter with 56.4 million, which was driven by sales by their streaming players and Roku TV models. Now they believe that this slowdown in active account growth rates is because of the global supply chain disruption that have impacted the US TV market. They even continue by saying that the overall US TV sales in Q3 fell below pre-COVID 2019 levels. Some of the Roku TV OEMs partner were hit particularly hard with inventory challenges, which negatively impacted their unit sales figures and market share in Q3. They continue while Roku player unit sales were down year over year in Q3 2021. Unit sales were above Q3 2019 levels. Their player unit costs were impacted by the supply chain disruption. However, they chose to insulate our customers, so they basically took the hit on themselves, and that resulted in player gross margin decreasing 15%. Now, they obviously see this issue as a temporary one, not as a long-term issue. We've seen and we've heard the term supply chain issues with most companies reporting earnings this quarter. But again, this is supposed to be a temporary issue, not a long-term issue. Now, you might ask, what does Roku have to do with all of this? Yes, maybe their TVs don't get delivered or something like that. But even that's not necessarily 100% correct, because I went on Amazon.com, search for Roku Power TV and sticks, and there's still lots of inventory. So maybe in some particular areas, some particular stores, there's just no inventory there. But not just that, advertisers, companies that want to advertise their product, won't spend any dollars if they don't have any inventory. So that's another way how companies like Roku, Amazon, maybe Shopify as well, and maybe even the Trade Desk might get impacted negatively. If the merchants, the people that want to advertise product, just don't have the product, they're not going to spend dollars to advertise a product that they just don't have. Hopefully that gets resolved soon, because, well, Q4 is usually a big quarter. There's Black Friday, there's Christmas, so lots of people go shop. If there's no inventory, that's a huge problem. Not just that, because the stores also need to sell. And if they have no inventory, they usually increase the prices of the products that they have. And that might impact their sales, that might impact people that want to buy a TV, and suddenly that TV is more expensive than usual, so they won't even buy that. But we're gonna see what happens in Q4. Right now, I have no intentions of selling Roku anytime soon. I think the growth story is still intact. The company is still executing. Yes, they could have done some things much better, like maybe go to TCL or even Samsung or maybe some other manufacturer there and say, look, you're going to make TVs just for us. You're going to make TVs with the Roku OS on it. We're going to pay you a bit extra and we're going to give you a cut from the platform revenue. That's something that they should have been discussing earlier. Also, the story with Amazon Prime, etc. was fake, but the talks with Google are ongoing. So right now, there's really just FUD out there and uncertainty. Until something is official, nothing has changed. And if something will change, I will let you all know. Now let me know what you thought about this quarter in the comments below. Are you still holding? Are you planning on selling? Let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.